So guys, let me know once you are back. Let me know once you are back.
I'm back. I'm back.
Okay. You can confirm me in chat as well.
I'm
I'm
back.
back.
Yes,
Okay,
I'm
great.
back. I'm back.
Okay, okay,
I'm back.
okay. Philip, are you back? Wait.
Uh, yes,
Yeah. Okay. Let's start. Let's start. So guys, we had discussed about IDR and RCM. Okay. Now we'll discuss very important topic, which is the risk. Okay. So what we have discussed till now, we have discussed the basics of audit. We have discussed about audit planning. Okay. We have discussed how this audit planning is prepared. So here we discussed from the organization's perspective. Okay. Now, now I will tell you about a risk. Okay. What is a risk? Like, as an auditor, we need to identify risk for each the scenario. Okay. So Dilip has asked how to identify the risk. So that definitely we will be going to discuss in the entire sessions as well. But before we do that, do you know what is a risk? In a simple language, okay, in a layman language, what do you understand by the risk? Tell me. What do you understand by the risk? Tell
I
me.
think risk is a threat and vulnerability of a system.
Threat and vulnerability of a system. What about others? What is a risk?
is the possibility that a threat can exploit the vulnerability.
Very good answer. It is a possibility. So basically, a vulnerability is a weakness into the system, and threat is something that can exploit the vulnerability. Okay. So that is called a risk. You are absolutely right. Now let's discuss some conceptual knowledge about a risk. Then we will discuss the practical aspect of it as well. Okay. So what is a risk? Okay. Okay. Now, what is a risk? So basically, risk is what? Risk is a potential event that may impact to the entity. And as per, dictionary, Oxford dictionary, what is a risk? Definition of a risk: the probability of happening something which is multiplied by the result or cost benefit if it does. So that is called a risk. Okay. So in simple language, can I say that risk is a probability into the impact? The risk is calculated via formula of probability into the impact. Now, in the risk, as you mentioned, there are two terminologies which is very important. One is called the vulnerability, and another is called as a threat. So, what is a vulnerability? Vulnerability means weakness into the system. That is called a vulnerability. When I say threat is what? Threat is something that can exploit the weakness. Okay, so that is called a threat. Okay, now what are the example of vulnerability? For example, if in your PC the antivirus is not there, okay, antivirus is not installed in the PC, so that is a weakness in your PC. Now this weakness can be exploited by the hacker. Okay, they can exploit this weakness. They can install any malware. They can install any virus file. So that is called a threat, something that can exploit the weakness. Okay. Now, since we are auditor, we should know what is an audit risk. Correct. As an auditor, we should understand what is an audit risk. So from a layman language, we have discussed that risk is what? Risk is something that can potentially disturb the normal organization's processes. That is called a risk. Okay, that is called a risk. So similarly, what do you understand by the audit risk? Now there are two things. One is audit and one is risk. So what do you understand by an audit risk? Tell me. What do you understand by an audit risk?
I think audit risk should be
Can you
a risk that can be minimized.
Risk that can
Be minimized.
be minimized. Okay. What is audit risk?
I think an audit
What is
risk
audit
is
risk?
a potential damage that can take place if an audit is not carried out or performed.
If audit is not carried out, this is what you want to say?
Yes, sir.
Okay,
So
what
can it,
about others?
Can it be a
can it,
risk that can be discovered during an audit?
Risk that is discovered during the audit. That is discovered during the audit. What about others?
I think
so risk
risks
means,
that the risks that
so
the
risk includes,
risks that
Please.
the auditor may not be able to see in the course of carrying out the audit.
Very good answer. Very good answer, Eddie. Very good answer. So, guys, what is an audit risk? Okay, let's discuss about. So, basically, what is an audit risk? In short, audit risk is a risk that your auditor may not be able to detect the material error during the course of audit. For example, you are appointed as an ITGC auditor. Okay, you are appointed as an ITGC auditor for SHN company. Okay, SHN company. So you are appointed as an auditor. Now, once you are appointed as an auditor, you will perform the audit. Suppose you have performed your audit and you have reported no observation. You have reported no observation, zero observation in your report. Now, can I say that there is no risk in SHN company? Can I use this statement that there is a no risk in the SHN company? Can I say this terminology? Because in your audit report, there was no observation. So, so can I say this yes or no?
No.
no,
Correct. We cannot say this statement since there was no observation in audit report. There is no risk in SHN company because of an audit risk. Audit risk refers to a risk that your auditor may not be able to detect or material errors during the course of audit. Okay. Whatever auditor is performing, he was not able to detect the material error. Now, this audit risk is influenced by three risks, which is IR, CR, and DR. Now, what is an inherent risk? Let's discuss about the same. So, inherent risk is the risk that activity possesses excluding any controls or mitigating factor. So, inherent risk is also known as a gross risk. That is a risk before the controls are applied. As an auditor, when you go for audit, you will check the control. But before checking the control aspect, also there are some risk which is known as a inherent risk. Risk that activity possesses. Okay, it is called as a gross risk as well. I will be giving you example of each the risk. First, we'll discuss the theory part of it, and then we'll discuss the practical part of it as well. Okay. So that is called an inherent risk. Now, second is a control risk. What is a control risk? Control risk refers to a risk that your internal control will fail to prevent or detect. For example, in organization, definitely they also have implemented some internal control, correct? They also having their internal audit department. Okay. There are process owner, there are a risk compliance department who mitigates the risk. But suppose if your internal control is also ineffective, okay, there are few cases where controls will be ineffective. So that risk is known as a control risk. The next is a detection risk. It is a risk that your auditor will fail to prevent or detect any error while doing an analysis. Suppose when you are doing an analysis of the data that is shared by the entity, you suppose if anything that you have missed, okay, because you are also human being, there are chances that you can do mistake, correct? So you can also miss some controls verification, you can also do some errors. So that error is known as a detection risk. If you need to calculate the overall risk is calculated by a formula IR multiplied by CR multiplied by the DR. Now there is one more risk which is called a residual risk, which is called a residual risk. Now, what is a residual risk? Residual risk is a risk that is there when you have applied the control. It is known as a net risk as well. Okay. Now you might be thinking that then what is the difference between control risk and residual risk? Control risk refers to a risk that internal control failed to prevent or detect, and residual risk is a risk that remains after applying the control. Now, what is the difference between residual risk and control risk? Can anybody please explain me that? What is the difference between residual risk and control risk? Yeah. What is the difference between residual risk and control risk? Control risk is a risk of ineffective control. What is a control risk? It is called as a, here our control was not effective. Okay, risk which is there due to ineffective control. Ineffective control. Okay, so that is called as a control risk. When I say a residual risk, it is a risk. For example, suppose you have implemented the effective control. Control is implemented, it is working effectively, then also there is some risk which remains, which is known as a residual risk. So this is a difference. When your control is working perfectly fine, it is working very effectively, then also there is some risk which is remain. That is known as a residual risk. If your control is not working effectively, it is ineffective control. There are some gaps in the control. Okay, so that risk known as a control risk. Okay. So now, since we have discussed the theory, you might be interested to know that how this works in a practical life as well. On paper, you have discussed that this is IR, this is CR, this is DR. But how to implement this IR, CR, and DR in a real life, correct? You might be thinking that for that, I have given you one case study. So go to the data folder. In the data folder, there is an audit framework folder. In the audit framework, there is an audit risk folder. So this is the case study which I am opening. So you can read that on the screen as well. Or if you want to open, you can open in your PC as well. So this is your case study. Please read this case study and help me to calculate the IR, CR, and DR. Okay. Read this example and then help me to calculate the IR, CR, and DR. Yeah, guys, tell me, are you done with the reading? Are you done with the reading of this case study?
Yeah, we are done with the reading.
Yes.
Okay. Everybody is done. So can you please tell me how you will calculate audit risk in this scenario? How you will calculate the audit risk in this scenario? Tell me. This is a real life scenario. How you have to calculate the audit risk? How you will calculate this? Tell me, waiting for your answers. Okay. So as we know how the audit risk is calculated, audit risk is a multiplication of your IR, CR, and DR. Correct? This is how the audit risk is calculated. Correct? This is the formula for calculation of audit risk. Okay. Now, in this scenario, can you please tell me what is IR as per your knowledge, as per your understanding? What is IR? Which statement will help you to calculate the IR? Which bullet will help you to calculate the IR? I'm waiting. Tell me.
One.
Okay. Okay. So first one and Dilip is saying second one. There are many branches, SHN company, stock market listed company. Okay. Which bullet will help you to calculate the CR? Which bullet will help you to calculate the CR?
The third one.
The third one. Okay, now let me ask you. So basically, risk assessment we can do using two method. One is called as a qualitative method, correct?
Yeah.
And second is called as a quantitative method. Okay, what is a qualitative method? In qualitative method, we will do a risk assessment using some subjective parameter like high, medium, low. And in a quantitative method, we will use the numbers 0 to 1, correct, or percentage. Okay. Now, suppose if you need to do a qualitative assessment, so what do you think? IR will be high, medium, or low in this scenario? In this scenario, what do you think? Inherent risk is high, medium, or low? Tell me your view. Tell me your view.
Extremely high.
What do you think here?
High.
High. Can anybody of you please tell me why you are saying that inherent risk is high in this scenario? Give me the rationale, please. Why it is high? As mentioned by Dilip, what is inherent risk? Inherent risk is a risk that an activity possesses excluding the controls or mitigating factor. Now, in this case, what will happen? This is an SHN company, which is a stock market listed financial institution. When any company is a stock market financial listed institution, what does it mean? That they need to comply with a lot of rules. They need to comply with a lot of regulatory requirements. Okay, there are many things that they need to take care. Similarly, this company has a many branch and franchises and subsidiaries. So basically, this is a complex structure. As an auditor, when I have seen this structure of SHN company, I feel that inherent risk would be high in the SHN company. Now, to arrive that inherent risk, I am not going into the detail whether controls are implemented, whether it is not implemented, whether there are internal audit department. I don't care all this stuff. While calculating inherent risk, what I am doing is I am calculating that inherent risk from the perspective of the nature of activity, from the perspective of the nature of business. Okay. So inherent risk is a gross risk that auditor will calculate before the controls are applied. So in this case, this two statement will help me to identify the inherent risk. And as mentioned by you, I completely agree with you that inherent risk is high. Now, this is my judgment. I am saying that inherent risk is 90%. Suppose I want to do a quantitative assessment here. So I have converted that value into the numbers and I am saying that inherent risk is high in SHN company. Okay. Now I will move to the control risk. What is a control risk here? High, medium, or low? What is a control risk here? What do you think?
High.
Okay. What about others? What about others? What is a control risk here? Everyone, please participate. Tell me. What is a control risk? Okay. What about you, Charles? What is a control risk?
A failure to observe the government guidance.
Failure to, yeah. So company doesn't have an internal audit department despite of a guidelines. So
Yeah.
as an auditor, what do you think? That controls may not be implemented appropriately, correct? There would be an ineffective controls in the organization. There will be an ineffective controls, correct? So as an auditor, I am feeling, yeah. So as an auditor, I am feeling that inherent risk is 90% and control risk is also 90%. Now, what is a detection risk? Detection risk is a risk that auditor may not be able to detect any material errors which is there in the processes and all. So detection risk is something that auditor can control. Detection risk is something that auditor can control. For example, I am just taking a hypothetical example here. What I'm taking, I am taking a hypothetical example. For example, suppose you have to verify one process. In that process, there are 100 line items. There are how many items? There are 100 items. Okay. Out of 100 items, suppose if you have verified 90 items, practically it is not possible because auditor cannot verify 90%. But yeah, I'm just taking a hypothetical example. Now, what do you think that how many items are there which is not verified by an auditor? How many items are not verified by the auditor? Tell me.
10
10,
items. Yeah.
10 items are not verified by the auditor. Now, in this scenario, what will happen? What is a detection risk? It is a risk that auditor will not be able to detect the any material errors. Now, in the 90 item also, there are chances. In the 10 items, since this is not verified by me, then I am not able to detect the error in the 10 item. So I am saying that my detection risk is at 20%. Okay, now again, this is my judgment. Again, this is my judgment. Okay, because I have verified this many samples from this many population. So I am saying that my detection risk is how much? It is a 20%. Okay. Now I will calculate the overall risk. What I
Sorry,
will do, I will, yeah,
sorry.
tell me please.
It's a little bit lost here. So you have 10 items, you have 100 items, 90 done, 10 not done. Isn't that translating to 10%? Why is it 20%?
Why it is 20%? So basically, Joyce, what I'm saying is suppose there are 100 items. This is the population of the transaction. What is this? This is the population.
Yeah.
Okay. From the population, as an auditor, you will select the samples. Correct?
Yeah.
As an auditor, you will select the samples. So what I am trying to tell you is IR and CR, inherent risk and control risk, will help the auditor to select the sample size. For example, if your IR and CR is high, then as an auditor, you need to select the more sample. But if your IR and CR is high, that means auditor need to select more samples. Correct? Why
Yeah.
auditor will select more samples? To keep the detection risk low. If
Yeah.
auditor will select the more samples, then that means your detection risk would be low as much as possible. This is one example. I will give you another example. So in
Yeah.
this first example, in the first scenario, what will happen? My overall audit risk is 16.20%. This is my overall audit risk, 16.20%. Now, in the same example, suppose instead of 90, you select the 60 samples. Now, in this case, what would be your detection risk? Tell me. We are just assuming now 40 items will not be verified. Correct? 40 items will not be verified. So I am assuming that my detection risk is somewhere around 50%.
So
Okay,
what I'm trying to understand is that with this example you are giving, is it not a direct correlation? For instance, now this particular
yeah,
example, if we do 60 items and we have 40 left, that means 40 over 100, that's 40%. So I'm asking, is
correct.
you don't have a direct correlation
Why?
or guessing?
Correct. I understand. You are saying that if you have not verified a 40 item, then it should be ideally 40%. This is what you are saying, correct?
Exactly. exactly what
Yeah,
I'm saying.
but what will happen, Joyce? There are some chances that from a 60 also you have missed something. Okay,
Oh,
so this is your judgment only. Entire IR and CR is the judgment of auditor. See, if you are doing a judgment, then you may take a 40%. If I am doing, I may take a 50%. Dilip may take a 55%. Okay.
oh,
Some other will take other. So basically, this we are doing a judgment, high level. Okay.
okay.
Just
Makes
a
sense.
judgment. Now, yeah. Now what will happen in this scenario? In second scenario, when your DR was 40%, what is an overall audit risk? It is 32.40. Now you tell me which one is better. 16% is better or 32% is better? Which one is better? In terms of audit risk, which one is better? Tell me.
16%.
Why?
Because it's low.
Yeah. So audit risk, if audit as an auditor, what is your main objective? As an auditor, your main objective is to keep the audit risk as
Low.
low as possible. Okay, as low as possible. This is your main objective in the audit risk. To achieve this objective, first auditor will assess the inherent risk and the control risk. Okay, what auditor will do? First auditor will assess the IR and CR. If your IR and CR is high, then as an auditor will keep the DR low. Why auditor will keep the DR low? So that you achieve your overall objective to keep the audit risk low. Suppose now let's take another example where suppose SHN company is a small company. There is no SHN company is not listed on a financial market. There is a proper internal audit department who is checking all the controls. So in this case, IR would be like, less because now that, you have a confidence on the company. So you will say that my inherent risk is 30%. My control risk is 30%. Okay. Again, this is your judgment. Again, in the third scenario, this is the judgment of auditor. He's saying 30%. Now in this scenario, since your IR and CR is already low, you can keep the detection risk high. Even if you are keeping your detection risk high, 40%, 50%, 60%, you will see that your overall audit risk is much lower. Okay. So this is the correlation of your IR, CR and DR. Okay. So as an auditor, what are the risks that you cannot control? Can you please tell me what are the risks that auditor cannot control? Which is a risk that auditor cannot control? Tell me.
IRCR.
I see.
Residual.
Yes. So IR and CR, these are the risks that auditor cannot control. Okay. Auditor cannot control the IR and CR. This risk is controlled by the organization. It depends on the organization nature. It depends on their business. It depends on their control environment. So as an auditor, our job is to assess IR and CR. Basis on our assessment of IR and CR, we can decide that what should be the detection risk so that we can keep our audit risk low as much as possible. I hope now this is clear. Okay. Earlier, we have just discussed the theory part of it. Now we have discussed the practical aspect of it. So I hope this is clear to you. What is the relationship between IR, CR, and DR? I hope this is clear to everyone.
Yes.
Okay. Is this clear, Celia, Ella? Is this clear?
Yes, that's clear.
Yes, sir.
Okay. Okay. So this is your IR, CR, and DR. I will save this file. Okay, so that you can refer this file and you can use in a real life. Now, my next question to you guys. Suppose you are saying as an auditor, as an auditor, there are some chances that you will not be able to detect the risk and all. So do you think that auditor will highlight the same in the audit report as well? Because here you are saying what? As a part of audit risk, there is some risk that auditor may not be able to identify, may not be able to detect the material errors. Do you think that auditor will put these statements in the report as well?
Yes.
that auditor will put.
Yes.
Okay, why auditor want to put this statement into the report?
I just feel for transparency, and accountability, basically, at least for that fact, and
Okay,
also help the next auditor to have an idea, the next year audit to have an idea of what the situation of the company is. It's actually is part of their professional requirement to let the company know the exact state of things.
very good answer, Joyce. What about others? Give me few more pointers. Why audit risk, needs to be written into the audit reports? Why? As mentioned by Joyce, it is a good
I
practice
think it's to make
and it will.
the report credible and to make for the auditor not to be held accountable in case of anything.
Very good answer. Very good answer, Celia. So basically, it will prevent the legal. Sometimes it will help a auditor from the legal liabilities point of view as well. Suppose if you have conducted the audit, after conducting the audit, suppose there was some fraud detected in that process. So as an auditor, it will help you to some extent from the legal liabilities as well, because you are putting that suppose I have done the audit, it doesn't mean that there are no risks. Have you seen those disclaimer in a real life? Have you seen those disclaimers in the audit report? Have you seen those disclaimers, guys? I will show you. I will show you the disclaimers. You tell me it is covered in the which para. Okay. So this is your disclaimer. Yeah, you can read this and tell me where they have written about an audit risk. Tell me this 567. From 567, where they have mentioned about the audit risk.
Point 7.
Okay. Tell me what is written in point number 7.
It says because of their nature's controls as a service organization and subservice organization may not prevent or detect and correct all misstatements in processing or reporting transactions. Blah, blah, blah. It just that's where it said oh sorry.
Okay, very good. Very good. Similarly, in point number 6 also, can you see that statement? Can you read the statement in
Yeah,
point number 6 as well?
I think number 6 states is very well.
Yeah. In the 6, it is very well written. The potential effectiveness specific control at a client is subject to the inherent limitations. And accordingly, error or fraud may occur and not be detected. Our observations provided are for point in time of this cyber security and are subject to risk that is change. Subject to risk that changes made to the system controls or failure to make the needed changes to the system or control and may alter the validity of such observation. Okay, so basically here auditor has highlighted that was even I have completed the audit, it doesn't mean that there are no risks. Similarly, I have a format of another disclaimer. Read this disclaimer. Yeah, Joyce, tell me. Sorry, Joyce, tell me.
I was just wondering because I thought it's supposed to be like in the conclusion. That disclaimer is not supposed to be in the conclusion, like when you're concluding the report.
Yeah.
I'm just
So basically, Joyce, what will happen in the SOC report and all in the conclusion part only, they will give the disclaimer. In
mm,
sometime internal audit report, you will see a separate paragraph of a limitation or disclaimer.
oh,
So
got you.
whether you want to include in the conclusion, whether you want to include it as a separate paragraph, that is fine. But the main thing is what you need to give the disclaimer of an audit risk. That is a main thing. Correct.
Oh,
Now you can do that in any area. Okay, either in the conclusion, different form. Okay.
uh, thank you.
Now let's read that disclaimer. Let's read this disclaimer as well and tell me the paragraph which pointer is talking about an audit risk.
I think 2 and 3. I haven't gone through yet, but 2 and 3 have some disclaimers.
You are right, Celia. Absolutely right. Since we have focused only on the specific area which were identified and agreed with you in advance, our scope and procedure may not disclose all the issues and significant matter about the department company, reveal all the errors, irregularity, and the frauds in the underlying information. Okay. And we now next paragraph also written that we don't plan and prepare our work with the objective to prevent and disclose discovering the fraud and give no assurance that for the period covered by audit is free from the fraud or other irregularity. So there is one more terminology, guys. In audit, you might have seen that auditor will always put this that our audit report gives a reasonable assurance. Reasonable assurance. What does it mean? Reasonable assurance. What does it mean? It is called a reasonable assurance. So as an auditor, you will give the reasonable assurance, not the absolute assurance. Okay. Reasonable assurance means that auditor has used their professional judgment. They have used a due care to identify the risk which is there in the processes, but that report doesn't give us an absolute assurance that the uh, uh, entire process, entire financial statement, or entire area is free from all the frauds or irregularity. Okay, so it is not giving you an absolute assurance. It's more about a reasonable assurance. Okay, so as an auditor, it is very important for us to understand the audit risk. It is very important for us to put the audit risk into the audit report. Okay. So I hope you are clear with this part. What is audit risk, how it is calculated, and how you will put the same into the report. I hope the entire thing is clear to everyone. I hope this is clear to everyone. Okay, fine. Okay, now let's move to the next topic. So we had discussed about a risk. Okay. Now, as an auditor, how you will minimize the risk? Okay. How you will minimize. So basically, as an auditor, you will conduct the risk-based auditing. You will review the internal control system. You will select the appropriate sampling methodology. Okay. As an auditor, it is very important for us to select the appropriate sampling. Okay, for that also I will tell you how to select the samples, what are the things that needs to be considered while selecting the sample. Okay, and as an auditor, you will assess the materiality of the processes and the system in the audit scope. Now here there is one terminology which is called as a materiality. What is materiality? What is materiality? Have you heard about this terminology? Materiality.
I think materiality has to do with value, but in this context, I don't know what it means.
Okay, value. In terms of value, what is materiality? In terms of value, what is the materiality? Now I will explain you this with the example again. Okay, so we'll discuss both kind of materiality in terms of value as well and in terms of non-value as well. Okay, so basically, suppose there are total 100 transactions. Okay, how many transactions are there? 100 transactions are there. The total value of this 100 transaction is $10,000. Okay. Total value of 100 transaction is how much? Total value. This is a total value of the 100 transaction. Total value 10,000. Okay. Now out of this 100 transaction, there are 10 transaction. Okay. 10 transaction which consists the 7,000 total value. Okay. Value is 7,000. And remaining 90 transactions are there which consists the 3,000. Okay, so this is a sub bifurcation of your 100 transaction. This is the sub bifurcation of your 100 transaction. So out of these 100 transactions, which transactions are material? Tell me. Which transactions are material in a nature? Tell me. Tell me, guys, which transactions are material in a nature?
10.
Okay, what about others? What about others?
I think 10 because
Yes. So this 10
Yeah, 10
transactions
has
are
more value.
material. Yeah. This is called as a material transaction in terms of value. Okay. Now, as an auditor, suppose if you need to select the 15 samples or 20 samples, whatever sample size you want to decide, as an auditor, you will select more samples from this 10 transaction because this 10 transaction consists the more values. Okay. This is in terms of values. Now we'll discuss in terms of non-values as well. Suppose you are doing an audit of a change management process. What process you are auditing? You are auditing the process of a change management. Now in the change management, suppose organizing during the audit period, total 100 changes was done. How many changes was done? Total 100 changes was done. Out of those 100 changes, you have further analyzed, organization has classified those changes on the category of a major change or minor change. Okay. So basically there are 30 major changes and 70 minor changes. Okay. Now, as an auditor, you tell me from where you will select more samples and what would be a material, what material samples for you. From where you will select the more samples? Tell me. From which transaction you will select the more samples? There are
10
two types of, yeah, tell me.
because it has a low value.
From where you will select?
I think I'll
Major
select
or
from the 30 because
30? Okay.
yeah,
Why? Why?
because it has major changes that could impact the organization positively.
Very good answer, Celia. So basically what you are doing as an auditor here, as an auditor, why you want to select more samples from the major changes? What you have assessed? So as mentioned by you, you have assessed the materiality of the processes. How much critical that process is for the organization, what would be the impact of that process on the organizations. Basis on that only you have selected the samples. So that is called as an assessment of the materiality. So as an auditor, it is very important for us to assess the materiality of a transactions. Basis on that only we will decide that how many samples needs to be selected, from where we'll need to select the samples. So as an auditor, we do analysis of our data first. After doing an analysis of our data, we identify what transaction needs to be selected in the samples. So that is called as an assessment of a materiality, and this materiality can be assessed using the values as a figure. We can assess the materiality using some non-values like the impact on the organizations. Okay, the potential dependency of that particular process on the organizations. Basis on all that factor, we can assess the materiality of the process. Okay. So if you do all this task, then you can minimize the audit risk. Okay, if you do the proper sampling, if you assess the materiality, if you conduct a risk-based auditing, if you review the internal control system, by way of this, you can minimize the audit risk. Okay, as an auditor, you can minimize that audit risk. So that is what we discussed here. Okay. Now it is the experience and the expertise of auditor that minimize the audit risk. As I told you, this is a very subjective thing. Okay. If you are more experienced, if you have more expertise, then obviously you will focus on more high risk area. You will assess the materiality more properly, more effectively. So it is the experience and expertise of auditor that can minimize the audit risk. Okay. Can you please tell me, can we keep our audit risk zero? Can we keep audit risk zero?
No.
We can
Why?
only minimize it. We cannot keep it at 0.
Correct. Why it cannot be zero? Now, suppose if somebody asks you that, let me give you a hypothetical example. Suppose in our audit risk example, what we discussed, let me open that example again. Okay. What we have discussed while calculating an audit risk, we have discussed some example. So let me open that. So we have discussed this example where population was 100, you have verified the 60 items. What if you verify all the 100 items? If you verify 100 item, can I say that your audit risk would be 0%? Sorry, your detection risk would be 0%. Can I see this, say this? Suppose if you have verified all the 100 transaction, can I say this? Your audit risk, sorry, your detection risk would be 0 since you have validated all the population. Can I use this statement? Yes
No.
or no?
No.
Why?
No, sir.
Why?
Because
No.
it first of all, it's never absolute, and audit risk can only be mitigated, never eradicated. So you can never say that there's no risk. And
Very
there's
good. Absolutely right. There are chances of human error. Risk cannot be eliminated 100%. Risk cannot be
Yes.
eliminated. Risk can be mitigated. Correct?
Yes.
So you cannot
Yes.
say that my detection risk would be 0. You can say that it would be 2%. I am okay with that. But you cannot say that it would be a 0. Okay. So risk cannot be eliminated 100%. Similarly, you cannot say that my audit risk will be 0. Okay. So this is not possible. Okay. Very good answer. Okay. Now, now I will tell you about some risk response methodology. For example, suppose if organization has identified the risk, how organization will respond to that risk? Okay, what are the methods to responding to those risks? This we will be discussing here. Risk response methodologies. So guys, risk response methodologies that is available. Now, what is the risk mitigation? Risk mitigation means whatever risks are there, organization will implement some level of control on the risk to mitigate them. Okay, that is called the risk mitigation and risk reduction. What is the risk avoidance? It is an changing of the strategies or a business process to avoid the risk. Suppose if risk is associated with any processes, you have eliminated those processes. So that is like a risk avoidance. When I say a risk acceptance means what? You have decided to accept the risk in as is format. You are not taking any actions. You are not doing anything. You have accepted that risk. This is called as a risk acceptance. When I say a risk transfer, that means transferring a risk to some third party where whatever losses that has been occurred due to the risk, that loss will be beared by the third party. For example, insurance is a best example of your risk transfer. Okay. So these are the risk response methodologies, which is there. We'll discuss each of the methodology with the example as well. And out of this four method, the risk mitigation and risk reduction is most widely used methodology. Okay. Okay. And how the risk, which risk response methodology you want to choose, that will depend on your risk appetite. Okay. As per the risk appetite of the organization, they will decide what response methodology they want to implement. Okay. So here we'll discuss the same along with the example. Suppose meteorological department has forecasted heavy rain during the day, and you all need to attend this IS audit practical approach lecture. Suppose we are doing this lecture in person. There is no online lecture, and you need to come to the class and you need to attend the lecture. Now here, what is the risk? The risk here is what? The risk of rain. Correct? Since meteorological department has forecasted heavy rain. So now for you, what is the risk? Risk is a rain. Rain is a risk for you. How you can handle the risk of rain? There are multiple methods through which you can handle this risk. First is what? Majority of candidate will arrange the umbrella or raincoat to safeguard them from a potential rain. So this is like a risk mitigation or risk reduction because you have implemented some level of control to mitigate the risk. Some candidate will won't worry about the umbrella or raincoat, and they will say, I will come to the class, I will not carry anything, I will see whatever will happen. So that means they are accepting the risk in as is format. They are not implementing any control, they are accepting the risk. And some candidate will say that I will not even attend the lecture. That means what they are doing, they are avoiding the risk. What they are doing, they are avoiding the risk. So this is some of the example of your risk mitigation strategies. What is this? This is some example of your risk mitigation strategies. I hope this is clear to you. I hope this is clear, guys. I hope
Yeah.
this is clear. Yeah.
It's clear.
Similarly, I
Correct.
will give you one more example. Yeah, tell me. Is this clear? Do you want to say anything?
It's clear.
It's clear.
Guys? Okay. Now let's see an example here. Okay. For example, this person wants to go from here to here. This how we can what you're doing is like a risk mitigation and risk reduction. What is a risk avoidance? If he decided not to go from here to here, that is like a risk avoidance. He is avoiding the risk. What would be the risk acceptance? This is the risk acceptance. Okay. So this is the example of your risk response methodologies. Okay. Now, again, we discussed this already, and it is not possible for organization to mitigate all the risk. Okay, risk-free or risk-free enterprise is an illusion. Okay, and you cannot run a business without taking risk. Risk management is a process to determine whether the amount of risk taken by an organization is in accordance with the capability and the needs of the organization or not. So that is called as a risk response methodology. Okay, fine. Now, what we will do is we have discussed this. We have discussed what is a risk. We have discussed about an audit risk. We have discussed about a risk response methodologies as well. So we have discussed a lot of theory. Now let's come back to our practical approach. Okay. Let's come back to our practical approach. So we'll start with the governance aspect first. Okay. We'll start with the governance aspect of it. So let's go. Okay. So,
I think you are frozen. I think you are frozen, and or is it me? Can you guys hear him? Well,
His screen is frozen.
Yeah, I think there's a network problem.
Yes.
Yeah, I don't hear.
okay, let me reshare my screen.
His voice is not even clear.
Let me
anymore.
reshare.
Yeah, it should be a
Could I
network
reshare
problem.
screen? I'm resharing my screen. Is it visible now?
not yet.
Your screen is blank. There's nothing on your screen.
My screen is not visible, guys.
No,
Your screen is
just
blank.
black.
There's nothing there.
Black screen.
My screen is not visible, guys.
No, it's not.
No,
No,
nothing is
your screen
visible.
is not visible.
Yeah.
Okay, it's
Okay,
on now.
one moment.
Oh, yeah, it's
Visible.
fine.
It's good
Now,
now.
Visible?
Yeah.